Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday morning market webcast. Okay, so daily chart, and you can see we are in our first sustainable bear market rally since the big drop and the move to 2316. We've been retesting the area from Fed Day on December the 19th, 2686 pre-Fed price, 2692 reaction high. 96 to the round number 2600 has been stiff resistance. So, we've been trying to get through it now for 1, 2, and this Globex session. They haven't been able to do it so far. So I mean what I say here. The bulls need another green day. They need to put it over the top. There's only so long they're going to get to linger in any one place before the overall trend reasserts itself. And, we remain 140 handles below the 200-day on the front month contract, about 105 handles below the 200-day exponential on the continuation contract. So the bulls can't linger. They need to continue to progress. Doesn't mean they have to rip it to the upside every day. They haven't been. This has been a slow grind to the upside this week, especially the last 3 sessions. They have taken it down in the morning. They've bought that dip and they've ground it to the upside, sometimes smoothly, sometimes pretty sloppy, but a grind upside depending on, the news bombs in between over the course of the day. So on an hourly chart, you've got higher low here. Here's monthly pivot. That was tested back on Tuesday and Monday. Support, support, support. They find resistance, they bring it back. Here's your higher low. Here's a marginal higher high, but they've really got to get through 2600 now. They can't keep bumping their heads up here. I like them to push above 2600. The question for me is really how far. So for our part yesterday, we were short for the dip down in the morning. We got into the long, where we could. The problem with this whole tape, from my perspective, is you can throw darts at those dips in the morning, and we end up getting long those dips. But we've been getting long those dips after those dips proved to us for like 4, 5, 6, 7, 8 handles that they're the real deal. Because if you start assuming that they're the real deal, and this is the one that's not the real deal, then you are going to be the primo bag holder for the reassertion of the trend and a pretty big old move down. And I'd rather skip that part. So they can have the first 4 or 5 handles of these moves, and I'll grab the rest. So sitting around, we got about 19 locked in on yesterday. It's been a big week. I mean, considering how whippy the tape has been at times, it's been a really good week. For us today, we're in weak protection mode. By the time we get to Friday, we always are. What I'm interested to see is 2600 on the up, daily pivot on the down, and then do we even get to visit this low here that they spiked it down to 73.5, and then this low here at 60.5. The bears need to, in my opinion, break both of these today if they're going to give everybody something to think about over the weekend. And if they can do that, really, I said it yesterday and I meant it. They are just noise above the monthly pivot. Everything they do is just noise. If they convert the monthly pivot and keep it converted at 48, then, retrospectively, if they did it right now, you'd be looking back and saying, okay, well, we've just closed 50 handles basically off the current high. We're headed into a weekend. Maybe that's the end of the party. Until they do something like that, we're going to continue to grind higher. It's going to be sloppy because they're going to fight it every step of the way, but the grind will be up. And so plan accordingly. If you shave away all the BS, it's a bear market rally. You can be long, you can stand aside, you can try shorts here or there. We certainly did yesterday. But if they don't work, you have to take your profits as they are, accept the stop out, or accept the fact that you just got run over, and get out. We use that 5-handle disaster stop, for situations like that, and then figure out a way to get long and ride the rally. Don't get stubborn short. Don't add. Don't turn a day trade into a swing trade or do all the stupid things that traders do when they're trying to fight price. Don't fight price. Never worth it. All right, everybody have a great day. Have a great weekend. We'll have some more stuff out on social. Check that out. Come check us out. If you trade this stuff, you want to be in here with us. You want to be in here with us every single day. You're going to like what you find. All right, take care. Talk to you soon. Trade them well. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.